The pursuit of a U.S. spot Bitcoin ETF has been a long and arduous journey, marked by numerous applications, rejections, and regulatory hurdles. In recent years, the cryptocurrency market has witnessed significant developments and shifts, creating a growing anticipation of the U.S. finally embracing a spot Bitcoin ETF. In this extensive article, we will explore the evolving landscape of the cryptocurrency market, the implications of a U.S. spot Bitcoin ETF, and the potential market impact. The evolution of cryptocurrency as a non-sovereign reserve currency. Bitcoin has established itself as the non-sovereign reserve currency of the digital world. As the first cryptocurrency, it holds a unique position in the rapidly expanding digital asset space. From an investment management perspective, Bitcoin offers the potential to diversify well-balanced portfolios and improve total risk-adjusted returns. The elusive U.S. spot Bitcoin ETF. Despite the growing significance of Bitcoin, there has been a notable absence in the market, the U.S. spot Bitcoin ETF. This investment vehicle, which could provide direct exposure to Bitcoin's spot price, has been sought after for years but has remained out of reach. The road to its approval has been marked by obstacles, including rejections by the U.S. Securities and Exchange Commission, SEC, of all 33 applications from various filers. This journey began over a decade ago when the Winklevoss twins first sought regulatory approval. However, recent developments have ignited fresh hope. Major players in the financial industry, such as BlackRock, with its impressive $9 trillion in assets under management (AUM), and a strong application track record, have entered the fray. Grayscale, a prominent digital asset management firm, achieved a significant victory over the SEC by overturning its initial application denial. Furthermore, leveraged Bitcoin futures ETFs and Ethereum futures ETFs have received regulatory approval. These advancements signal that we are now closer than ever before to the much-anticipated U.S. spot Bitcoin ETF. Market comment: the evolving regulatory landscape in the United States has become a pivotal factor in the cryptocurrency market's trajectory. The SEC's cautious approach to approving a U.S. spot Bitcoin ETF has generated anticipation, with the market eagerly awaiting a breakthrough. Bitcoin's performance has been influenced by these developments, with notable gains driven, at least in part, by hopes for the approval of a spot ETF. 2. The imminent arrival of a U.S. spot Bitcoin ETF. Industry analysts and experts now peg the chance of a U.S. spot Bitcoin ETF receiving approval by early January at a remarkable 90%. Grayscale's discount to net asset value (NAV) has narrowed substantially, dropping from 45% at the beginning of the year to 13%. This reduction suggests a higher market-implied probability of approval and conversion for a U.S. spot Bitcoin ETF. The market's response to these indicators is evident in Bitcoin's impressive year-to-date performance, surging by 110%. Market comment: the cryptocurrency market is increasingly becoming intertwined with traditional finance. The involvement of major financial institutions, such as BlackRock, further underscores the growing acceptance of cryptocurrencies as a legitimate asset class. The cryptocurrency market's response to regulatory developments and market sentiment continues to be a focal point for investors and observers alike. 3. The market potential of a U.S. spot Bitcoin ETF. A U.S. spot Bitcoin ETF represents a massive opportunity, primarily due to the sheer size and influence of the U.S. capital markets. According to the Securities Industry and Financial Markets Association, SIFMA, the United States accounts for a substantial 40% of the total global fixed income assets and equity market capitalization. Moreover, ETFs in the U.S. represent a more substantial percentage of total assets compared to other jurisdictions, comprising 7% of equity and fixed income assets, in contrast to 4% in Europe and 2% in the Asia-Pacific region. In numerical terms, this translates to a colossal $7.0 trillion U.S. ETF market, dwarfing Europe's $1.5 trillion market and Asia-Pacific's $1 trillion market. When viewed from a different perspective, the total assets managed by broker-dealers, banks, and registered investment advisors, RIAs, in the U.S. amount to nearly $50 trillion. Consequently, only a small percentage of these managed and brokerage assets migrating into a spot Bitcoin ETF can significantly impact the market. The high level of crypto adoption in the U.S., with a fourth-place ranking in Chainalysis's Global Crypto Adoption Index, bodes well for the potential translation of this adoption into investment. Market comment: the U.S. spot Bitcoin ETF's arrival could potentially redefine the cryptocurrency market. Its integration into the vast U.S. capital markets has the potential to reshape the industry's landscape, as it becomes more accessible to a broader range of investors. The cryptocurrency market's response to this shift in the investment landscape is an area of keen interest for market observers. 4. Advantages of a U.S. spot Bitcoin ETF. A U.S. spot Bitcoin ETF offers several advantages over alternative trading vehicles, setting it apart as a preferred choice for investors. It combines a unique and advantageous blend of low fees, lower transaction costs, enhanced liquidity, reduced tracking error, and simplified operational complexity. Additionally, it eliminates the need for investors to grapple with intricate custody issues. While Bitcoin futures ETFs have been available since late 2021, they come with inherent disadvantages. These include tracking error, tax inefficiency, and roll costs, which often result in underperformance over time. Consequently, futures-based ETFs are better suited for short-term trading strategies, rather than long-term buy-and-hold approaches, which fail to fully capture the benefits that Bitcoin can bring to a portfolio. Market comment: the advantages of a U.S. spot Bitcoin ETF, particularly in terms of cost efficiency and simplified operational processes, have not gone unnoticed by market participants. The potential appeal of such a product extends beyond cryptocurrency enthusiasts to institutional and retail investors. As market participants seek the most convenient and effective means of exposure to the cryptocurrency market, the introduction of a U.S. spot Bitcoin ETF is highly anticipated. Legitimacy and regulatory clarity. A U.S. spot Bitcoin ETF would provide a significant boost to Bitcoin's legitimacy in the financial world. It would eliminate regulatory uncertainties, which have prevented many compliance departments from allowing Bitcoin investments. Furthermore, the introduction of a spot ETF would lend credence to cryptocurrencies as an asset class, ensuring strong oversight and investor protection, all within a convenient and familiar investment vehicle. The potential involvement of industry leaders like BlackRock, with its sterling reputation among financial advisors and broad distribution across major wealth platforms, further reinforces the credibility of cryptocurrencies. Market comment: the cryptocurrency market has long grappled with issues related to regulation, custody, and investor protection. The arrival of a U.S. spot Bitcoin ETF could provide much-needed clarity in these areas, opening the door to broader participation from institutional investors and the general public. The impact of regulatory clarity on the cryptocurrency market is a significant focus for market analysis and commentary. 6. Financial advisor recommendations. Currently, only 12% of financial advisors recommend Bitcoin to their clients, as indicated by the Digital Asset Council of Financial Professionals. However, a remarkable 77% express their intention to do so once a U.S. spot Bitcoin ETF becomes available. This shift in sentiment among financial advisors underscores the transformative potential of a spot ETF in expanding the cryptocurrency market's reach. Market comment: the role of financial advisors in shaping investment strategies and recommendations is crucial in the financial industry. The changing attitudes of financial advisors toward cryptocurrencies and their willingness to recommend Bitcoin investments are indicative of the evolving acceptance of digital assets in traditional finance. Observing this shift in sentiment is a focal point for market analysts. 7. Comparing with the gold market. To understand the potential impact of a U.S. spot Bitcoin ETF, it is insightful to draw a parallel with the gold market. Before the introduction of the first spot ETF for gold, the SPDR Gold Trust, GLD, investors faced challenges in accessing the precious metal. However, the SPDR Gold Trust accomplished a remarkable feat, amassing $1 billion in assets within just 3 days, setting a record at the time. Today, it holds approximately $55 billion worth of gold, equivalent to 1.5% of the total global gold supply. Market comment: the historical precedent set by the SPDR Gold Trust in the gold market offers a valuable perspective on the transformative potential of a spot ETF. While the comparison isn't perfect due to differences between gold and Bitcoin, it underscores the market's ability to rapidly embrace new investment vehicles, especially those offering easier access to previously challenging assets. The gold market's evolution can provide valuable insights into the potential trajectory of a U.S. spot Bitcoin ETF. 8. Potential impact on Bitcoin's price. The introduction of a U.S. spot Bitcoin ETF has the potential to significantly impact the price of Bitcoin. The magnitude of this impact depends on several factors, including the ultimate approval, the assets under management, AUM, gathered by spot ETF products, and market sentiment. Predicting the precise effect on Bitcoin's price remains challenging, as it involves numerous variables and uncertainties. Market comment: the cryptocurrency market is known for its volatility and sensitivity to external factors, making price predictions a complex endeavor. Market analysts and commentators closely monitor the developments surrounding a U.S. spot Bitcoin ETF, with particular interest in its potential influence on Bitcoin's price and overall market dynamics. 9. Comparing Bitcoin and gold. Comparing the impact of a spot ETF on Bitcoin with the effect of a similar product on the gold market reveals some noteworthy differences. Both assets have a relatively fixed supply, making them appealing to investors seeking a store of value. However, before the introduction of the first spot gold ETF, accessing gold was far more challenging than obtaining Bitcoin today. Despite this, the SPDR Gold Trust's rapid growth and its current standing as a substantial holder of gold illustrate the market's willingness to embrace innovation. Market comment: the cryptocurrency market's behavior, in response to the introduction of a U.S. spot Bitcoin ETF, is subject to ongoing analysis and debate. As market participants continue to assess the potential impact, the parallels and disparities between Bitcoin and other traditional assets, like gold, remain a key point of interest. The magnitude of Bitcoin's impact. It is worth noting that Bitcoin is significantly more volatile than gold. Therefore, investors require less exposure to achieve the same potential return. Additionally, the market capitalization of Bitcoin is only 27% of that of gold in 2004, highlighting the cryptocurrency's potential for exponential growth. A U.S. spot Bitcoin ETF could have a more significant impact on Bitcoin's price for each net new investment dollar it attracts, relative to the impact that the SPDR Gold Trust had on gold. Market comment: Bitcoin's unique characteristics, including its high volatility and limited supply, make it a distinct asset within the financial landscape. The potential for a spot Bitcoin ETF to generate substantial price movements, given Bitcoin's market capitalization relative to gold, remains a subject of keen interest among market analysts and observers. 11. Uncertainty surrounding approval and inflows. Despite the growing optimism around the approval of a U.S. spot Bitcoin ETF, uncertainties persist. The ultimate approval and the volume of assets that spot ETF products may attract remain unpredictable. The impact on Bitcoin's price, whether due to relatively subdued sentiment compared to past bull markets, price run-ups in anticipation of approval, or potential underwhelming short-term inflows, introduces a degree of uncertainty. Market comment: the cryptocurrency market is marked by its dynamic and unpredictable nature. As the market anticipates the approval of a U.S. spot Bitcoin ETF, questions and concerns regarding its potential impact, short-term market fluctuations, and long-term market stability continue to drive discussions and market analysis. 12. The game-changing moment for Bitcoin and digital assets. In conclusion, the cryptocurrency market stands at a pivotal juncture. The evolving regulatory landscape, the anticipation of a U.S. spot Bitcoin ETF, and the potential for increased institutional and retail participation could represent a game-changing moment for Bitcoin and digital assets as a whole. The market's response to these developments is a topic of substantial interest and speculation. Market comment: the cryptocurrency market's transformation, catalyzed by a U.S. spot Bitcoin ETF, is poised to reshape the financial landscape. The cryptocurrency market's journey towards mainstream adoption and recognition continues to captivate the attention of market participants, analysts, and observers alike. The potential for a U.S. spot Bitcoin ETF to serve as a catalyst for this transformation is a focal point for market commentary and analysis.